Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and with me is Snehi Shah. And this is a show where we tell you how the markets fared today and, of course, what can you watch out for in tomorrow's trading session. But first up, a rather lackluster day of trade coming in on Monday morning. In fact, Nifty ended the day below previous session's close as well. We were, pretty much above 24,600, but we were below the Friday's closing session. But a rather lackluster day. In fact, Nifty Bank, that was, supposedly outperforming the benchmark indices, also gave up those gains and ended the day down 88 points with cuts of 1/10% coming in on Nifty Bank as well. But Nifty Metal was really shining through the somber day of trade coming in. Nifty Metal did pretty well for itself. Whether you have Jindal Steels, Wellcorp, SAIL, Ratnamani, all of these stocks were doing pretty well, trading with gains of almost 2%. Nifty IT was also doing pretty well. Wipro was up 2%. Emphasis, Persistent, all the IT counters were doing well. But what was really under pressure is the FMCG pack, and of course it is on the back of the operational updates that came in from Godrej Consumers that posts a rather somber picture for Q3 on the back of lack of demand and of course the weather conditions, and that weighed down the entire FMCG pack. In fact, names like Marico, HUL, Tata Consumers, Dabur, they were all trading down 4% today. In fact, Godrej Consumers was down as much as 11% in the morning trade. Nifty FMCG was reeling under pressure there. Also, we had Nifty Media that was reeling under pressure. It was also trading with cuts of almost 2%. Couple of other things that made news, of course, was also Nifty Pharma. That was also under pressure today on the back of that US Biosecure Act that has been, that has left all the pharma CDMO Indian players in a limbo. And on the back of that, all these names like Divi's, Newland, Piramal Pharma, Syngene, they were all trading and reeling under selling pressure. What was outperforming though was the broader markets, but I think by the end of the day, the broader markets performed well, especially the mid-cap names that were trading 0.5%, 0.5% over, and a couple of names that were doing pretty well for mid-caps also. But largely the saving grace of the market today was the broader market, specifically the mid-cap names that were doing pretty well, like Kalyan Jewellers, the Supermine that was doing pretty well, up 6% odd. So broader markets is where the action was, but the rest of the market was pretty muted, I would say, Snehi.
Absolutely, very muted trading day coming in for us. Not much action coming in on the street. Like you mentioned, the broader markets were doing pretty well. You had Nifty Bank that was gaining at one point, but has reversed those gains, erased all of those gains since they had locked in those gains earlier in the day. Let's talk about some other stocks that did pretty well today. MapMy India, which is CE Infosystems, has reversed its decision to invest in the new company, make any equity or debt investments in the proposed new company. So on the back of that news flow, that stock was in focus today. You had Suven Pharma that has bought majority stake in NJ Bio. So Suven Pharma also did pretty well in the first half of the day. You also had Ciet on the back of that Michelin acquisition coming in. Trident was in focus. Delivery. Divi's Labs, like Ankita mentioned, on the back of that Biosecure Act that was left out of the US defense bill. So all the pharma stocks were lagals in today's trade. Lots to watch out for. There were lots of spaces that were buzzing, some that did not do very well at all, because the likes of Ciet amid a market like this, 10.5% higher. You had CE Infosystems, a very sharp last half an hour rally coming in for that stock. Very good 16% gain coming in for CE Infosystems as well. So all of those stocks have done pretty well in today's trade. But let's keep the discussion going about what to expect for tomorrow, because last couple of weeks we have seen some pretty good moves coming in. But what's up next? To talk about that, let's welcome on board Akshay Bhagwat, Senior Vice President Derivatives Research at JM Financial Services. Akshay, thanks so much for joining us. Give us a sense of what you are penciling tomorrow's trading session to be like. Right from the opening bell, what do you expect the moves to be like? Is it going to be a better session than what we've seen today?
Good afternoon. Thanks for having me on the show. Well, a muted session to start off the week, but if you look at the short-term big trend for the market, the way we have started off for the month of December, the buying numbers are there from the FIIs in the index future segment. Even in the cash segment, you are seeing some respite in terms of the selling numbers going slow, some buying coming out in cash numbers as well. And I believe there is some more momentum to go forward in the month of December. So I believe the trend trend is still strong. Maybe even the day might start on a slow note tomorrow too, but somewhere 24,550, 24,500 is a very strong support zone from a short-term trading perspective basis Nifty spot. And my belief is that there should be some recovery and the strong momentum pickup once again, once 24,500, 550 zone gets tested. I'm expecting upsides roughly till around 24,850 to 25,000 in this next 5 to 7 trading sessions.
Okay, those are the levels that you're penciling in. But Akshay, tell us, in this market, it was a muted start, but in this market, is there any pocket where you're seeing value? Because banks have done pretty well. HDFC, Kotak, both were lending a lot of support today. That and any other pocket where you see value coming from?
Yes. So I think banking is one sector where the momentum is very strong. It's just that the last 3 days we have seen some bit of a breather in the banking space. But overall, if you look at the bank index, that's the bank Nifty, still all-time high is where this index can head for. That's roughly around 54,300. And if bank Nifty is set to achieve those targets, then it has to be the PSU space which should take the lead. And we have seen a lot of long additions in the derivative space as well, to the likes of State Bank of India, Punjab National Bank, Bank of Baroda. So keep a watch for the PSU space. I believe that should lead the banking index to the all-time high levels. And some pockets in the private space, and HDFC Bank should recover well, along with Kotak Bank, which has been rather muted in this entire move. So I believe these two banks should be looked forward to. Besides the banking pack, you can even keep a look at the IT pack, because that is one sector which has been resilient, been strong. In fact, if you look at today's market, in the last half an hour of trade, we did see a strong momentum surge in most of the IT names. So Tech Mahindra, HCL Tech, TCS, some mid-cap IT names, these would all be some of my picks from a short-term momentum catching perspective.
What I understand, Kotak Bank and TCS looking attractive to you, at least from the short term. Thanks, Akshay, for joining us, taking the time out and speaking to us at ET. Now, on that note, we'll let you go. But time now to slip into our Word from the Wise segment, and that's some investment ideas today coming in from the house of MK. Why does Manish Sonthalia see a silver lining when it comes to the export-oriented players? Let's go across and hear out his view and his take on various sectors and the outlook going forward as well.
Consumer is one segment which is really vulnerable, and we have seen that the commentaries from large cap consumer names are not only talking about consumer staples but consumer discretionary as well. Obviously, the medium term and long term outlook on consumer discretionary is very positive. The capital goods space, the government did a corporate tax cut during the pandemic, expecting that the private sector will pick up capex. There's not too much of capex that have happened. I mean, it's really disappointing. And we have seen the capital goods space, the valuations are probably discounting the next 5 years of earnings. And everything that goes with the private sector capex, only the government seems to be spending. And even that spending is somewhat tapered off in the run up to the elections, and then the monsoons and the first 2 quarters have really gone. So expectation is second half there should be pick up in spending. Silver lining in terms of earnings growth will be coming in from the export related sectors. The ITs, the pharmas, banks in any case were very cheap. They will lend a helping hand to the index. But really the consumer and the capital goods space is vulnerable.
Well, with that, it's time for us to slip into a short break. You don't go anywhere. We'll be right back. Back to your trades. Let's go across and see how the derivatives diary is shaping up for the 12th of December expiry for this week, of course. Let's see what the trend is like. At least for Nifty, we see a short build-up happening, and the trend for Nifty Bank is also a short build-up, which means there is a bit of a bearish sentiment that has crept into the market now. India VIX is at 14.1, so not much to worry about that, given the levels that India VIX had touched in the few weeks ago. But that's where India VIX is at. If you look at the Nifty active call and put levels, so for the 12th of December, we see the active calls at 24,700 levels and also 24,800 levels, while 24,700 also forms the level for resistance for Nifty. As far as active puts are concerned, 24,600, we see a mild put buying coming in, and 24,500 where mild put writing is also there. So that's where the active put calls are there. So a mild bearish sentiment is what we can see building up in the market. That's that's how the derivatives diaries looks for as far as 12th of December expiry is concerned.
Okay, so those are the next levels to watch out for when it comes to the world of derivatives. But let's talk about a stock that was in focus today ever since the get-go, and that's Godrej Consumers. Massive intraday cut coming in for this stock, and this is on the back of their standalone Q3 business update that they've reported, where they've said they're expecting to report around flattish underlying volume growth and around mid-single-digit sales growth. The negative trends are likely to persist for a few months, is what the management has said. This is on the back of the impact to the soaps and home insecticide business. Remember, together these businesses contribute 2/3 to the overall standalone revenue, and a surge in palm oil prices has impacted soaps, while you have weather and seasonality conditions that have impacted home insecticides. The company has taken price hikes and reduction in grammages for key soap packets across the entire soap board, and you also have home insecticides that will be affected in Q3 as well. When it comes to the rest of the portfolio, that's expected to deliver double-digit UVG, is what the company has said. In terms of margin outlook, the current inflationary environment has created pressure on the margins, and they expect temporary downward breach going ahead. Internationally, Indonesia is expected to return mid-single-digit volume growth and high single-digit sales growth. The GOM area, which is Godrej Africa, USA and Middle East, they expect volume decline due to reduction in trade stocks. When it comes to what the brokerages are making of this stock, UBS has maintained a buy rating with a target price of 1450. JP Morgan has maintained an overweight with a target price of 1410. They believe that the update shows higher than anticipated revenue earnings risk, which is likely to further weigh on the share price of the stock going ahead. Macquarie has maintained a neutral rating but has cut the target price to 1260 from 1300 earlier. They're concerned about the palm oil inflation. And lastly, MK has downgraded the stock to a reduce from an add, also trimmed the target price to 1225 from 1375 earlier. So Godrej Consumer, one of the biggest losers on the street today.
All right, moving on from the biggest loser on the streets today to one of the stocks that was doing pretty well, and that is CEAT, that was doing pretty well. It hit its almost 52-week high after the tire company announced the acquisition of Camso brands of highway construction equipment tire and track business from Michelin for $225 million. The Camso deal will be EPS accretive, that according to Arnab Banerjee, the MD and CEO of CEAT. Let's go across and listen in to what else he had to say about the deal and the company's price hike plans.
It will be definitely EPS accretive over a period of time. Initially, first of all, it will take about 6 months to complete the deal. So we will get possession of the property, so to say, by May, June of FY26. And thereafter, we'll start consolidating this result. So initial period, there is a offtake and a supply agreement with Michelin, so that business continuity is mentioned. I think that's a very good arrangement. And when gradually we start getting control of the entire operation, it will be EBITDA accretive first and then EPS accretive. We have taken price hikes in truck bus radial segment, in passenger car segments, and in OEM it is indexed. So in OEMs, we have got about 4% price hike roughly on an average across categories. So we would be looking up at opportunities also to take up prices in our international business.
Okay, well, on that note, it's a wrap on this edition of Your Trades. Thanks so much for watching. We'll see you bright and early tomorrow morning. But before we do that, up next, as part of our ongoing campaign, Mutual Fund Sahi Hai presents Smart Nivesh Sahi Nivesh, partnered by Times Network. We bring you Mutual Fund Simple Hai, a segment dedicated to busting myths about mutual funds. And in our first segment, we're addressing a common belief. Mutual funds have a lock-in period. Is this a fact or is this just another myth? Let's dive in and uncover the truth.
Hello and welcome to Mutual Fund Sahi Hai presents Smart Nivesh Sahi Nivesh, partnered by Times Network. Today we're diving into a fun segment that's all set to clear up some myths and simplify the world of investing. It's called Mutual Fund Simple Hai. So now, whether you're a seasoned investor or whether you're just starting out, we're here to bust those myths and clarify and clear what makes mutual funds as easy and as simple so that you can understand them without any effort. So let's get started off with this. Now, the myth that we're going to be looking at today is mutual funds have a lock-in period. Now, what do you think? Do they have a lock-in period? Do they not have a lock-in period? We went around India, we spoke to people, we heard from them. So let's listen to what they have to say about this.
Yes, they do have. They do have a lock-in period.
That I have no idea. I'll have to ask my parents.
I don't know about it.
They don't have a lock-in period, but it should be for the long term.
इसके बारे में ज़्यादा आइडिया नहीं है, but शायद हो भी सकता है उसमें.
Yes. No.
Lock-in period के बारे में तो इतना knowledge नहीं है मुझे. But you can say maybe.
No. No, I don't think so.
I don't have any idea.
लॉक इन पीरियड होता है, लेकिन बहुत कम होता है, काफ़ी कम है वो, मतलब इन्वेस्टर फ्रेंडली हो गया है अब तो काफ़ी कुछ.
All right, well, this is the view of the Janta. This is what they are saying on ground about the fact, or rather the myth, that mutual funds have a lock-in period. But now in studio, I'm joined by an expert. We have with us Swaroop Mohanty. He's the Vice Chairman and CEO of Mire Asset India. Swaroop, thank you so much for joining us here today. You help us clear the air, whether it's a myth or whether it's a fact that mutual funds have a lock-in period. What's your take?
Some categories have. Closed-ended funds and the ELSs, which are tax savers, have lock-in. ELS is a 3-year locked-in period.
Right.
But otherwise, there are funds across the risk spectrum, and some of them might have exit load based on the asset class they invest in. Suppose we're looking at equity, one should not invest for a shorter time. So most you will see an industry practice of exit loads being 1 year. It's not that you cannot get out, you'll have to pay some load and get out. But we have the money market fund, which is 24 hours you can exit, and then we have the closed-ended at the long end of the product basket. But broadly, mutual funds don't have a lock-in. Some might have exit loads.
So because I think what also happens with the general audiences when they talk about lock-in, they feel that वो पैसा वो डेट तक उसके पहले निकल ही नहीं सकता. So like what you've said is some have closed-ended, some have an exit load to kind of motivate you not to withdraw your money because it's for your own benefit. If you keep it in the longer period, it makes. What I'm trying to get to is that people worry, how soon can I get my money if I need it?
See, the best part of mutual funds is the liquidity, right? We have a money market fund which you can get back in 24 hours. We have the liquid funds which you can get back in 24 hours. Otherwise, broadly, it is T plus 3 transaction, redemption day plus third day. On the equity side, you get your money in your account. I've gone through the entire COVID period with people sitting at their homes. And let me tell you, the entire industry paid back every redemption on time. Just justifying how liquid we are. And that's the beauty. And today with tech, you can redeem it from the phone. So it is one of the best parts of, and why I represent mutual funds and do a career in mutual fund is I'm able to pay you back your money whenever you need. That's the beauty of our product.
All right, Swaroop, thank you so much for clearing the air and for clarifying that for our viewers. This is a myth busted here on Mutual Fund Simple Hai as part of Mutual Fund Sahi Hai presents Smart Nivesh Sahi Nivesh, partnered by Times Network. Thank you so much for watching.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.